Hello everyone, welcome back to another video. In today's video, we are going to continue with the volume profile series. So what we have today is the fourth part. For people who have not seen the previous parts, you can go ahead and watch the previous three parts that we have had to the series. So to summarize, we'll start with what we have already discussed in the previous three parts and then move ahead into what we're going to see in today's video. To start with, what I have on the right side of my chart is the Bank Nifty futures. So we generally use this as our base or datum line. Again, it's not sacrosanct. Again, this is so that we have a general idea of where the market is moving and where we can expect some sort of resistance or supports, or demand or supply stepping in, because these are areas or Bank Nifty futures is something that remains constant as compared to the options chart. Of course, there is more volume in the weekly options chart, but the problem is their sustained, their expiry is every 5, if you consider the calendar days or the working days, rather they are just 5 working days or a week to say so. And as compared to that, what we have on Bank Nifty, it is a continuous futures chart, so we'll have good references that we can take care of. What we're going to discuss here is we're going to discuss the fixed range volume profile in today's video. So what that means is what I have on the charts is a daily profile chart. So you see one profile being plotted every day. Okay, now instead of that, what we're going to use is fixed range volume profile, is something like a profile that is custom to us, or in the Quantower platform, what you're going to see is, if you look at the bottom corner over here, it is called the custom profile. So I am going to, or rather we are going to choose the profile or the area that we want to select to view a profile. Okay, so what that does is it gives us good areas where we can form good trade ideas or expect the market to move in the direction, and if it holds, we can take a trade in the direction where the market is currently moving. For example, this is an uptrend that has been going on for some time. If you look at this, so we're looking for good pullbacks to areas, and this is one way of getting into know the pullbacks or expecting where the market might take some sort of support, and we get a good move at least to the upper side of this range, if you can say so. So the first thing that we're going to see is and discuss is how, before I get into the volume profile, I would like to discuss our revise rather what we've discussed in the previous few sessions. It is not to do with the entire session, but what I'm going to discuss is how we use these parts, okay, these nodes, and how we use the value areas, because this is going to be primarily of great importance when we're discussing the fixed range volume profile. So this, of course, if you see, it is a trend day, and then the market forms a sort of a node or a balance area over here, if you can call that. Now, like we discussed in the previous videos, what we want, if we want that the market continues to move up or is showing some signs of let's say bullishness, what we want is that you see this particular node, the small one that is separating these two big nodes over here. So what we want is the market should not be moving below this node if the market is to continue towards the long side. So for example, let's say when you see this rejection on the 27th of June, that is on Thursday, if I'm not wrong, and you plan to enter again, this is of course hindsight, but we can discuss what we can expect in the coming few days, so that you can apply the same strategy to the way you trade. For example, this fixed range volume profile is of really good importance, or is really handy if you're looking for, let's say, intraday trades of 150 points. Okay, even scalping, it helps, because the areas that we're going to look at, they always give you 30, 40, 50 points whenever the market touches those areas. So moving ahead, so this is the area again that we would expect the market to hold on, because this was a trend day. Again, like we discussed the last time, these profiles or these nodes become really powerful if it happens on the end of a trend day, or if you remember what I discussed, is these balance profile nodes will be of their value area is of more significance rather than these nodes. Okay, because the market consolidated in this zone on this particular day. So of course it did break out and break down, but the essence is that it did not extend to any side. The range wasn't there. So what we use is, on balanced profiles, is the value area, which is somewhere here. You can have activate it, or go to the step profile and activate it. I haven't, because once you get used to it, you understand where the value is generally there. Okay, now what you'll see is the next day you would like to take a trade when we see a rejection of this zone. So for example, when the market opened within the value of the previous day, what we can expect is we wouldn't expect any drastic moves. It's only when the market breaks down, rejects there, or if it breaks down here. Even the first time when it breaks down, your resistance was somewhere. Let me delete everything and get back the whole thing. So the first time when it breaks down, let me get a ruler. Okay, so this was the, if you see, this was the value area, okay, of this day. So I'm talking about Friday. When it does break down, you can enter, of course, over here. Again, this is an intraday trade, so your stop loss would be somewhere above this place. Okay, why do I say that? Because this is another consolidation zone. So if it enters here, what we're expecting is a move to the other side of the range. So it doesn't, and you can, I mean, take a trade, even if this is your stop loss. It did give you 1:, more than 1:2 or 1:1.5 or 2, somewhere close to that. And the second time it does attempt the same thing, it fails. So when you have areas like this, I will get this back again, areas like this, that the previous day was a balanced day, so the next day, these balanced days will play really beautifully the next day. Okay, on the contrary, if you have trend days, what you can use is these nodes. Okay, and the nodes, the separation area between the nodes acts as a great rejection zone for you to get some 150 points, and even for scalpers. Okay, so now that we've discussed the two scenarios, that is, if you have a trend day, we use these, even on a neutral extreme day, sort of something like this. Okay, these days the market opens and it is actually a trend day, so you see these nodes forming. Okay, the separation between these nodes, that is this will act as great resistance points, or rather support points, when the market does move in this direction. Okay, and this is for a trend day. So the two scenarios that we discussed as balanced days, or a neutral profile sort of a day, this one where you use the value area as a whole the next day. And when you see trend days, what you do is you do the or you use these low volume nodes, or the nodes that are separated, the area between them, as the road, as the zones where you can plan your trade, or that is your entry point, to be more precise. Okay, now what we'll do is we will and for people who would like to know what the chart on the left is, it is a call option. Again, it is just in the money. If I'm not wrong, the market is at 450 to 400, so that is why we've selected a just in the money call option. I'll get to why I have put this on and how we can use even the options, because a lot of people, a majority of the people like to trade in options, as we know. Okay, so now moving ahead, let's go ahead and disable the step profiles. Okay, so you can have them as well, but for our purpose over here, we will to understand better how we can use these profiles, this is one way to do it. Now the other way, you can in fact use this for investing as well, on a daily profile and a weekly profile. It works wonderfully well. You can go ahead and try it after we are done with this. So we'll start with areas where you can see absolutely good trending moves. So obviously people who are here, somewhere here after this move up, they have stepped in. Okay, so the first way to know this is that the volumes, now again, it is very easy to or rather when you have zones or consolidation zones on a simple price action chart, you can find it there also. It gets a little trickier when you don't know where a pullback can be to. Okay, so it gets a little trickier because you have no idea why it has come to this place. Of course, in the hindsight, you can say that this was a candle, it tested its low, and that is why it happened. But on the other hand, if you just do this, okay, the place where the move started from and place where it ended, so if you just expand this area, so what you will notice is that there is a low volume node, a high volume node here, to which place. So obviously there is a lot of buying that has stepped in at this place, and these guys have defended it successfully. So again, you can carry forward this zone. Of course, the market did not come to this place. Let me get the rate. Okay, so this is a zone. Whenever the market does approach, you can expect a sort of a pullback from this zone. Whenever it does 50, 100 points, it depends, and so on. Now when you've seen something like this, it takes a support, you enter wherever you want, and let's say you are a guy who wants to target 400 to 500 points, which is not a big deal on Bank Nifty these days. So the first target for you then becomes the next high volume node from where you saw the breakdown happen. Okay, and your stop loss of course becomes this zone where you see this high volume node, and just below that. Now I'm sorry for that. So this particular concept, you can use it on any sort of time frame. Of course, the bigger the better. The bigger the better, I mean that at least it should be 5 minutes to find intraday trades. And if you use it on a longer time frame like daily and weekly, you'll be surprised with the results you get if you're into cash markets. Okay. And the next move that we see is somewhere here. We again go to the custom profile, and the next move that you see is somewhere here. Okay, so this is the up move that you see. And what we see over here is the rejection doesn't happen here. Okay, so of course now people will ask, should I enter immediately or should I enter or wait for a confirmation? What I like to see is I do confirm it with a if you may call it with a footprint chart. But even if you're not looking at a footprint chart and you find it a little confusing or overwhelming, what you want to see is something like these weeks, or a lot of even in these weeks you can see a lot of let's say sellers getting trapped. Okay, there is some sort of a confirmation. There are a lot of ways to find this out, because you're looking for these areas. Either you see something like this, it goes right up to that place, or pulls back and goes like this, so you enter somewhere here. Or if it doesn't go up to that point, it does something like this, you enter somewhere here. Again, it depends on the way you use price action. What I like to use is footprint and volumes, so I mean take my entries accordingly. So if you ask me where would I have taken my entry, it would not have been here. I just wanted to point that it would have been somewhere here. Okay, for the 500 point move up. Now similarly, what I was expecting is when this market moved up is the market to test this low volume node over here. Why? Again, this was the area what I was expecting the market to hold. It didn't. It tested this high volume node, so that is why a confirmation candle is of importance. Even if it is not, even if you enter here, of course your stop loss will be just below this or just below this candle. So it is finally up to you to how precise an entry you want, but you're waiting for some candle like this. Okay, so if this is a fierce move and somewhere here, so for people who want a high volume node, this is one where the market should have taken a sort of a break. It doesn't. But over here as well, if I may point out, what I was planning is, or what I was expecting a rejection is in the low volume node. So you would have seen that all the previous videos where I've gone, I trust the low volume nodes more for rejections rather than the high volume nodes. The high volume nodes are for consolidation. So for example, if the market had to go down, what it would have done is hovered around this point. So that is a way I would have looked to cover my positions rather than take a position of a high volume node. Rejection zone is a place where some players have got aggressive, and they're likely to step in whenever the market moves to that place. So that is why I trust the low volume nodes more. So if you see, there are a lot of times this place has held. Okay, now you can trade off these zones a lot of times. Now again, it is within the range, so what you're expecting is break of either of these ranges. So let's say if you look at this chart, and what I would want is, I'll just shift this place again. Okay, so if I want to go to a shorter side, what I would prefer is a break of this high volume node, that is 51,089, to go short. Okay, so I have not drawn it out of the blue. I know there is an area after which the market has broken again. Okay, if you look at these two places, and now I would want, if I have to go short, okay, and I need some confidence to go short looking for 500 or 600 points, the least I want is the market to break this zone 51,889, I'm sorry, which it doesn't. So I will look for any sort of trade on the upside again when this zone breaks and it goes back again up. So this is again a sort of look below and fail that I keep speaking about. The next target we expect is somewhere here, that is the upper side of the range, if you see. Okay, and the market does what it does. So now let's move on and see another scenario. So you can we will try and apply this to a let's say a daily time frame as well. So now you look at this move. Okay, this humongous move to the upside. Okay, now one way of plotting is I will just do there. I would rather prefer having two profiles. Okay, so what I would do is, the first profile would be something like this. So I'm just considering this particular zone over here. What I would have actually liked was again, this is a range, it is breaking out. So I'm sorry for that. So let's get back to this. So what we can do is we'll just shift it to manual. Okay, Yeah, okay. So what I would have liked is, or to take a trade, I wouldn't have entered here because it is hovered around here. Of course, this is a range, it is broken out, just too bad. What I would have liked actually to go long is, like you've been watching what I've been doing, is somewhere here. Okay, this is the area where I would have liked to go long between this POC, and that is 51,432 to 500 is the area where I would have looked to go long, and a breach of this area, and the stop loss would have been somewhere here. I will draw that area. So this is the way I would have liked to go. Just a minute. Okay, so this would have been the stop loss, and I would have targeted the high of the day. Of course, it didn't move to that point, and it went to the other side. Okay, so now let's go and ahead and draw another range, so that we can find where can we enter during this pullback. So this move up, you're always looking to take a long when you have seen something like this. Of course, people get aggressive, and the location is not that good. That is why we use techniques like this custom volume profile, that really comes in handy. So the other way that you can do it is from here to this place, and now you look for areas of low volume nodes. So if you see, if you can what we have been discussing, the areas where you enter are these. Okay, so I'll just go ahead and how I would now play this. Okay, so this is the last. If you what we'll do is we'll delete everything else. Okay, yeah. So now the first opportunity that we got when we got a breakout of this place was this one. Okay, and somewhere in this zone, even if you did not enter this zone, it's a very steep bar. Your entry could have been somewhere here. Okay, again, you could use footprint or basic price action. Your stop loss would have been below this POC, like I just said, or just at the POC, whatever you wish. And again, the first target was the to breach the high that we saw recently, and so on. If you've not seen any sort of rejection, you can keep holding it. Now if you see, the market has been, the next line I would like to draw is this. Okay, so the market has been holding this zone for a lot of time. Okay, and if you see, almost 2 sessions for now, and this is the first time it has broken this range. And if you see, we have gone just below and just tested this low volume node of the previous swing high, from the previous swing high, and we have kept over here. Now if you had to go long, what I would have done is, when we breach this area, I would have taken a long again, and the stop loss would have been, if you ask me, let's go here and plot another volume profile. Okay, so and I'm sorry, just a minute, and this one. Okay, so the stop loss would have been, if you've entered here, of course this is a very big stop loss, you're getting the value area as well. So the stop loss would have been somewhere here. If I've entered here, my stop loss would have been just above this. Okay, when I've entered here, of course it seems as the stop loss is not hit, but let's consider it has been hit, because what we're expecting is, after this range breakdown, I would have been expecting a test of 52,272, which it didn't. It bounce back fiercely to the upside. And over here, what I generally look for is, when it has done something like this, to hold off here and test the POC of this zone, which it didn't. It was a weird price action that took place, and it has gone down. Now how would I play this on Monday, or rather the next trading day, is I am looking for the market to now give me a clear signal. So if the market does go above this zone, that is 52,692 or 52,700, I would look and target 52,200. So what do I want? I will just let you know what I'm looking for when the market decides to go up here. So I want to see something like this. Okay, let me show you a bar that I want to see. If it crosses something like this, okay, and it breaks, and I can get a good point, or a place to place my stop loss, and let me release, and my stop loss would be if you see, this is 200 to 250 points. So my stop loss would be this volume node, or somewhere over here. Okay, and if the market does move below this, that is 52,350 sorts of range, we can expect a test of 272. But this is a zone which is now a little complicated, because you're looking for 400 and 500 points. It is always better to wait for these points. So for the coming session, these are the points that we have drawn, okay, where we can expect some sort of a move. So for example, if I get a move to 15,272, I'm of course expecting I would like to take, and if I see something like this happening at this price 272, or you can use a footprint, I would like to target the upper zone of upper end of this zone, that is 52,700. So we're looking for 450, 500 points, and the stop loss again, it's very simple, just below this high volume node. I do not want firstly the market to breach this and touch this. If it's touched, just too bad, we take our 150 point stop loss, but we're targeting almost 1:2, 1:2.5 when we're looking for areas above this. Okay, the other way you can use it, if it is keeps on going, moving down like this, you will find this trending move downwards. Again, you can use the volume profile for that zone to get further clarity on Tuesday or Wednesday and so on. So hopefully this video was of some help to you guys, and you could understand how to use the fixed range volume profile better. In the next video, or maybe in the next few sessions, we will try and use it on the options chart as well. The only problem is, like we discussed in the beginning, the options chart is it makes sense only for the past 5 days, or this current running contract, which is the 3 days that we've had. That is the Wednesday, Thursday and Friday, because the volumes are higher only here. So if you see actually the volumes that have picked up, again, this is because the market has moved here, but the volumes before that, if you try and see, are very, very minimalistic, and it doesn't make sense to plot areas or fixed range volume profiles from option charts. The other thing is that the strike prices keep changing, but nevertheless you can always use it. For example, areas like this where the volume has been up, something like this, okay, this area you can certainly use. What we'll do is we'll just discuss one scenario, and we'll use a custom profile over here. So for example, you saw a good move up from here. This is an options chart, again 52,300, and you see rejection from here, somewhere here happening. So if you're looking for going long on an options chart, you look for some places like this, okay, and you enter somewhere here. The stop loss again below this zone, somewhere close to this place. And again, the first target you have is what I would like to have is this zone, okay. You'll have to expand the volume profile on this one. So this is a low volume node of a sort, that is somewhere close to 950 or so. And the other problem that comes with options is it starts getting in the money, and then you have issues. If you want to pick up size, it sometimes becomes an issue, not always, but 400, 500 points is always doable if you take let's say a whole number options, that is 52,000 and 52,500. So that is one way you can play it. But again, if you're planning to use volume profile, it would always be better to use it on a bank nifty futures chart, and to time your entries precisely, maybe you can go into an options chart and look into the areas where you can find good entries. So with that, let's close the session for the day, and we'll continue further with another series of volume profile on the options chart, and using of custom VWAP along with this in the next session. Thank you guys. Bye bye.